Hey everyone, welcome to Etsy's quarterly report to shareholders Q2 23. We're looking at this from a business model perspective, and you'll be learning not just about Etsy, but also about two-sided platform business models, which is a very interesting topic. Let's start with financials. So GMS, which is the gross merchandise sale or the sum of all transactions on the platform, has come down, but interestingly, slightly down. Interestingly, revenue has gone up by 7.5%, which is quite remarkable. The reason for the number of or the value of transactions decreasing, according to Etsy, is headwinds impacting consumer discretionary spending. So in some countries called cost of living crisis, in other countries just high inflation and savings on discretionary items. And that's their reasoning for that, and it is a bit of a theme that does go through the entire presentation. Marketplace revenue up still by 3.1%, but the big one is services revenue up by 20%. Very remarkable. We'll have a quick look why that is. Profits up by 6% and operating expenses up by 30%. So there's a one-off item there that we'll have a look at in a moment. Let's move on. So let's first drill down into the revenue. So if the value of transactions down by 0.6%, why is revenue up by 7.5%? The main driver is services revenue. And services revenue is revenue that they derive from the sellers. And in that one, so here's the breakdown of all incremental revenue year on year. And Etsy ads is the biggest contributor. So basically they're selling ads to, or the sellers can buy ads from Etsy to promote their products on the Etsy platform more prominently. We know that from many platforms, and that has been the main driver of the incremental revenue this year. Now, very quick look at the financials. So despite gross profit being up, the net income's down year on year. And the main driver for that one is a positive one, that is investment in product development. So it went up year on year by 20%. As innovators, we like that, provided that's going to the right decisions. And then there's the kind of asset impairment charges, which was 68 million. There was a associated tax benefit from that, which cushioned the blow a bit, but still basically all of the difference or year on year is related to the asset impairment charges, and that is related to their acquisition ELO 7, which was called the Brazil Etsy, which they're now trying to sell and have impairment charges against it because they're going to sell it at a lower price than they bought it for. Economics. So this is more on the customer consumer side economics. So they've provided a lot of updates around the buyers, which is really interesting, and this is really also transferable to other two-sided platforms, e-commerce or non-e-commerce, and the transferable parts are just the lines of thinking, how tech platforms think about these kind of things. So let's have a quick look at metrics they're interested in, etc. So basically what had happened is during COVID, they had a really big influx of buyers, as did quite a few other e-commerce platforms. So then, therefore, when that kind of tapered off, there was negative growth figures last year. And that basically they're saying that this is stabilizing now. And let's take a look. Here are the active buyers. Here you really see a big jump. This is a COVID-induced kind of, you can't go to retail shopping, so let's go on e-commerce sites. The really positive note here is they have managed to not lose the buyers. It's actually normally one would want to have growth, but here it is an achievement not to have lost the huge influx of buyers that came during COVID. That is definitely one way of looking at this, and that is also how other tech platforms look at it, because some platforms basically have lost the additional traffic and consumers that they had as a one-off influx during COVID. So here they're trying to explain which metrics they're looking at, and GMS per active buyer is a really important one. So it does relate to things like customer lifetime value, or at least for that particular year. So again, they're calling out, and this is their words, they're calling out that GMS per active buyer has been going down, but it is now stabilizing. So basically they're saying the trend is turning around. And one number that they're calling out is compared to pre-COVID, GMS per active buyer has gone up by 28%. And that is an important figure. But also I'm saying that on other platforms, like if you want to have a look at our Airbnb business model update from Q2 23, you'll be seeing that these kind of the equivalent figures are significantly higher, depending on geography, but there are geographies where it's 40, 50, 60% compared to pre-COVID. So 28% is good, but yeah, it's not a phenomenon that we haven't seen elsewhere as well when it comes to discretionary spending post-COVID compared to pre-COVID. So now let's continue on the user economics side, buyer economics side. So here we're talking about buyer acquisition and reactivation. So kind of does go into the topic of what is the customer lifetime value? Are they coming just for one occasion, buy once and then you'd see them never again? Well, obviously all platforms, whichever vertical they're in, they will always want to keep and increase the customer lifetime value. So here the methodology, just a comment on that, because there can be many different methodologies and it depends on your own business which methodology you want to choose and what you think is the right way. Here what they've chosen is their benchmarking post-COVID to pre-COVID, but it is the pre-COVID period is from 2017 to 2019. So they're saying it is higher than pre-COVID, but honestly speaking, pre-COVID is now 2017 to 2019, and that is like 5-6 years ago. So personally, I do not think that is a very good methodology. Year on year, it's been a decline. So hopefully they can stabilize. The truth is it's a decline, and it's not from my perspective, in terms of buyer acquisition, it's not necessarily a super positive story. However, reactivation, different. It's not just above what they had pre-COVID, the average of the 2 years leading up to pre-COVID. It is up year on year as well. So that's a good result. Reactivation generally perceived or said to be costing a lot less than acquiring new customers. But this is a story that is evolving over the next few slides, and certainly also over the next few quarters. So let's look at first repeat and habitual buyers. So if we are retaining buyers, we can have repeat buyers, and that is in their words defined as someone who's making 2 purchases or more in the previous 12 months. A habitual buyer is someone who has 6 or more purchases and has spent $200 or more. So basically, that is a super loyal buyer. I mean, other platforms will have different thresholds for sure, but that's what it is on Etsy. And everyone needs to decide that for their own business, where the thresholds are. So based on that, here in terms of repeat buyers, I think we can certainly say is a stabilization. And they're saying 140% year on pre-COVID, year on 4 year. And habitual buyers more than doubled year on pre-COVID, but it is going down in quarter to quarterly post-COVID comparisons. Still, good achievement in terms of comparison to pre-COVID. But it's more for us, it's more about looking and understanding which metrics they're looking at, because it is not that different across many different platforms. So here's kind of a bit of an explanation around how that all comes about. Here they're showing pre-COVID, post-COVID. They have basically invested more into paid GMS. So they are investing into performance advertising as opposed to brand advertising, and they are seeing the results of it. Basically, they're saying their marketing mix has shifted towards retention, reactivation, and frequency, and they say they are seeing that in the numbers as well. So basically, new buyers as a percentage has come down because the number of reactivated and existing buyers, repeat and reactivated buyers has increased. So those are considerations that you could have, again, across many other platforms as well. Pros and cons of paid GMS. You have really proven that you have a working conversion funnel. That's the dream of any digital business. And you also, on the downside you need to see if this is sticky. So are the people coming back, or do you have to again do you have to pay marketing for these guys to come back? Because you'd be assuming that will also wear off at some stage if that is the case. So pros and cons here, but definitely a pro in having a working funnel. couple of things related to this. So obviously the main driver is external advertising. So basically shopping ads on Google, on Facebook and other platforms within their own app. So things that drive repeat and habitual buyers. They are just purchase touch point, post-purchase touch point. So basically someone who's bought something, they're trying to keep those guys coming back and engaged. Better outreach and improved seller-funded offers, which ties back to the Etsy ads revenue. And one thing before we close out the economics section, one thing that I found very interesting, so typically, active sellers has gone up by 12%. Typically, you'd be kind of seeing the reverse of this, where the active buyers would have grown much faster than active sellers. So I'm thinking that this could have to do with their Depop platform, which they've acquired maybe about 2 years ago. And that is different from Etsy. So Depop, I'll cover it a bit later. But that could be the explanation. I just wanted to show you a metric on the supply side as well. So these are things that we can see across all platforms. Here in the Business Model Canvas, take a look at our blog page. This is from, we got an article there that goes through the entire canvas. And here, one part that we've already covered is really the customer segments and the customer unit economics that we've just talked about in the first part of this video. So the next parts will go to some dedicated updates around the business model that they've covered. So let's move on. So Etsy, business model updates now. What I find really interesting about Etsy, they've been pointing out for quite a while now that search and discovery is a really major focus area that they have. And we'll see that in kind of their strategy house at the end. And check out our article. There's a lot more detail on that topic. But what I find interesting is that they've been investing and continuing to invest in different forms of search and discovery. So here they're basically talking about search engine technologies within Etsy search results, and really interested to see metrics coming out of that over the next few quarters. Again, here's just a few things, and we don't need to go into the details of this, but basically here are just a few things where they explain how they are trying to improve their search and discovery functions on their own platform. Very interesting if you want to look into the details if you're a developer or something. Then Etsy product development, major focus areas also AI-supported curation at scale. Again, I find it really interesting. If you look at Etsy or other platforms, they have one of their playbook items is to have human curated pages, which do boost sales more so than just plain listings. And what they're trying to do is AI-supported curation at scale. So that's really, really interesting. Basically, you'd be expecting that there is articles and in between there are photos and products embedded. So let's see how that will pan out into metrics. Again, it's one thing that they've been emphasizing for a while, so we'll really be waiting a few more quarters to see some results and updates, real metrics, tangible metrics on that. So moving on, the next one is affecting something that we are calling in all our work post-transaction costs. If you're a regular follower of us, you know that is something that we're stressing a lot. Someone can be an active buyer and then get disappointed, let's say. And delivery speed and reliability is one thing where Etsy is a little bit vulnerable. Like, let's compare to Amazon, where Amazon does their own fulfillment, but they are also offering to their sellers fulfillment by Amazon. So the seller ships stuff to Amazon warehouses, and then from there on, if someone orders, a buyer orders, Amazon will do the whole fulfillment. And as you know, if you've ever checked our Amazon articles on our blog page, they basically control most of what is happening from out their warehouses to the customer. So there's a very reliable delivery process there. Etsy and let's say eBay and other two-sided platforms, they're struggling there quite a bit, let's say, because there are always those sellers who sit on the orders, send it later, or it comes from countries where it just takes much longer. So definitely an important one. And just read through these. These are also very important in terms of gaining trust. And all of that for us is in the post-transaction cost. If you have an active buyer who then gets disappointed after the purchase because it just takes so long or the product's not as expected, well, how likely is it that they will come back? Same here. They seem to have had a fair amount of problems with things that were declared as handmade, but when the buyer has received it, it was obvious it was not handmade, or there were thousands of those being sold. So they're saying they have removed 29% more listings. So relative to what? I don't know. Relative to previous quarters, I guess, but how many were removed at that time, we don't know. But basically they're trying to say that they have a harder stand on these kind of handmade labels that they have on the platform. So and fulfillment, I think I talked at length about it. So all of this goes in the topic of post-transaction costs, as far as I'm concerned. A couple of words around a strategy. So this has basically been their strategy house that they've been showing for a little while in their annual and quarterly reports. Now, what I wanted to say about Depop, so the two acquisitions were Elo7 and Depop. The Depop is still part of their portfolio and part of their house of brands, as they call it. Now, what we're trying to say here is unique items. Etsy as well as Reverb are known for unique items. And quite a lot of the items that there are either unique or vintage, or it's not a one-off item, but there is not like millions of them around. It's not a run-of-the-mill item that you buy from Etsy. So typically, or you will find a lot of those items which are handcrafted, vintage, etc. Reverb is very similar. It's kind of the sale of used music instruments, and it's not, run-of-the-mill equipment that you get there. So tick in terms of unique, the strategy of having a collection of unique items. Depop, question mark. So Depop is sales of used apparel and jewelry, etc. And, well, is that really unique? If you buy someone's, second-hand shirt or pants, well, I'm not sure about that. You take a look at these three sites and you will decide for yourself. I will say this is different. It doesn't mean it doesn't have to be successful, but whether that is part of the house of brands of unique items, that is probably a little bit of a question there. It may still be successful, but I'm going to point out that there is huge amounts of competition in the sales of used items. There's like dozens of large platforms, and the latest addition is TikTok, who are also venturing into that space with their TikTok shop. But it's not just TikTok, there's many, many others. So interesting to observe that space. That was the comment on strategy. So this is all that we've covered today and that they have been giving updates on. In particular, the highlighted areas. Take a look at the article if you're interested in this. And if you're interested, you can have a look at our products, our premium products. So if you want to learn more about e-commerce, including about Etsy, Amazon Marketplace, Wayfair, so check out this course. 1 hour of the 6 hours is on that, but we're covering 11 different verticals within digital business models. So check it out. We got discounts running. Thanks very much. Check out our terms. We are not giving you any investment advice, nor will we ever do so. That's our disclaimer. Check out our terms if you want to know more. Thanks very much for your time today.